Targets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. And it's a special one because it's the start of a new year. 2026 always bring hopes, optimism. But if you're talking about the stock market, you don't have to look around for reasons to be optimistic because if 2025 is any sign of things to come, we're ending the year 2025 on a pretty strong note for a few reasons. So let's start with stocks were higher for the third consecutive year and not by a small amount, by nearly 18%. 2025, those returns were primarily fueled by earnings growth. And number three, market breadth or overall participation within the stock market was very strong, especially toward the end of this year. Now, stocks were higher for the third consecutive year. Here are S&P 500 index annual total returns since 1970. And if you look your attention to the right side of the chart, you can see the past 3 years were up 26, 25, and 18% respectively. That is three consecutive very strong years in a row. If you go back to 1940, this is only the ninth time during that time period that we've had three consecutive positive returns by the S&P 500 in excess of 15%. So pretty rare territory, only happens about 10, 11% of the time historically. If you look back at math, the actual 1 year returns on average are about 8%. So it doesn't mean that necessarily the top is coming anytime soon. Now, 2025 returns, yes, valuations have remained elevated during the past few years, but multiples did not expand by a significant margin this year. If we take a returns attribution, is what I like to call it here, that 17.9% return for the calendar year 2025, you can see that most of it was attributed to earnings growth. And this is based on earnings expectations over the next 12 months. 14.3% of that 17.9% was earnings growth. 1.5% was dividends, and only 2.1% was multiple expansion, which basically means the percentage increase in the valuation ratio, the forward 12 months price to earnings ratio. If you break that down one level further, which is the column to the right, you can see sales growth and margin growth, right? Top line revenue and margins in terms of profit margins for companies, the two components of earnings growth. It's a pretty good combination. Most of it was from margin growth, improved margins from companies, but about 5.5% of it was from top line revenue growth. So a little bit of a combination, mostly margins, some sales. Overall earnings growth was the major driver for returns in 2025. Now, third chart I want to talk about is market breadth, which said another way is the overall participation of stocks within the stock market. And all else being equal, we like to see a lot of different stocks from a lot of different industries participating in uptrends because we believe it increases the probability of that trend sustaining itself in the future, right? You're not putting all your eggs in one basket. Now, as we look at some different indicators, one of the ones on this chart here is in the teal is the New York Stock Exchange advanced decline line for NYSE securities. This is over 3,000 different stocks on that exchange. It's a running tally of stocks that are up for each day, minus stocks that are down each day. And it just does a cumulative tally of that over time. And what we typically want to see is when stock market indexes are making new highs, we want to see this market breadth line making new highs as well. And you can see at the December peak for the S&P 500, that cumulative advanced decline line also made a new high at the same time. So confirming that uptrend, not only are stock market indexes at new all-time highs, you're seeing market breadth indicators in terms of participation also at new all-time highs. that means it's not just a few stocks that are participating. And let's unpack that just a little bit here. A lot of this improved during the last 2 months of this year. Since October 31st through the end of December, so the last 2 months of the year, the S&P 500 did not do all that great, especially compared to the strong momentum that we experienced during the first 10 months of the year. The S&P 500 was up 0.3%. Not terrible, not great. But look at the S&P 500 equal weight index. Remember, S&P 500 is market cap. The bigger stocks have a larger impact. Equal weight gets rid of that size impact, and it was up 2.4%. So a lot of the companies outside the mega cap companies perform well. Look at S&P 400 index during that 2 month time period, up 2.1%. Small caps slightly outperforming that S&P 400 at 0.4%, and Mag 7 actually down. So we had this sort of rotation underneath the surface and a broadening of participation, especially on mid caps, which had been lagging during much of this year. So that improvement is part of the drivers of that improved participation and 80 line. We think that's a good sign as we close 2025. So before we wrap it up, I'm sure everybody or most people celebrated with family or friends or loved ones New Year's Eve or watched the ball drop on television. New York Times Square is one of the big areas we all watch. Fun, interesting fact, in this age of AI and robots and technology, how does all that confetti get dropped across that massive area of Times Square? It's actually pretty basic. There is a 71-year-old volunteer that has been known as the Confetti King, who rounds up over 100 volunteers who strategically placed themselves on 7 different buildings across that New Year's Eve party. And with walkie-talkies, they communicate it's confetti time, to which all of those different volunteers throw out over 3,000 pounds of confetti for that New Year's Eve celebration that's watched by millions of people all over the world. So pretty cool background on how it happens. I hope everybody had a great New Year's Eve and New Year's Day, and wish